investing into dividend-paying stocks or ETF in the hopes to turn that money into millions of dollars in the future. Seems like an idea that could never happen unless an investor has a ton of money to start off with or makes a ton of money every single year. But to be completely honest, this is just not the case. And in this video, we're going to go through it. I'm going to show you multiple different examples and multiple different investment vehicles in which a long-term dividend growth investor could invest as small as $5 every single day into them and be left with millions of dollars later on in the future. Now, I promise you are definitely going to want to stick around because some of these numbers are going to shock you. So make sure to drop a like down below and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So to jump right into it, the main reason why this entire thing is going to be even somewhat possible in the first place is because of this right here, compound interest. And according to Investopedia, compound interest is the interest on a loan or deposit calculated based on both the initial principal and the accumulated interest from previous periods. So the way that this works is that compound interest is calculated on the initial principal, which also takes into account all the accumulated interest from previous periods of the deposit or loan. So simply put, even if you start off with an investment, over time, if you consistently add to this investment and the investment pays dividends, and then those dividends are used to buy more into the investment, and that happens over and over and over again, the compound interest effect is going to take place. Now, I also promised something crazy during the intro that just a $5 investment into a high quality dividend growth ETF over time could compound a portfolio above $1 million later on. Now, just to give now before we go through some actual examples of different dividend growth ETFs that I think could possibly do this in real life. To go over some of the actual numbers here, a $5 investment for 365 days a year means an investor is going to be contributing $1,825 into their portfolio per year. Now, a portfolio that starts off with, let's say, $15,000, and of course you could start the portfolio with $0, $5,000, $10,000, $25,000. But for this example, let's start with $15,000 principal, an annual contribution of $1,825 per year, or of course $5 per day. An initial starting dividend yield of 3.5%, an expected annual dividend amount increase of 10%, and an expected annual share price appreciation of 3%. So these are basically the stats, somewhat of that of SCHD. Now, over time, dividend reinvestment is also going to be turned down because we're going to be reinvesting all the dividends over time and buy more shares of whatever ETF this is. So the numbers are in it, as you can see right here. The starting principal $15,000 with the annual contribution of $5 per day is going to grow the portfolio substantially over time to the point to where after 30 years of investing, just going off of these numbers we plugged in, and of course these numbers could change over time, etc., etc. So take it with a grain of salt. But either way, the portfolio after 30 years with just $5 invested and $15K off top is now worth $1.164 million. And sure, I did take 30 years for this portfolio to compound to the point to where it is over $1 million. But let's keep in mind this portfolio only has a contribution of $5 per day. Now, no matter what tax bracket you're in, no matter what income level you have, I think most of us, at least most of us, can afford to add $5 to our portfolio long term. So this just proves the point that every single one of us should at least build in a portfolio to this size long term, especially if we're relatively young. So now you might be saying, well, that all sounds great. You showed me the numbers, you showed me the math, and yeah, it is true in theory that if you found an investment vehicle with those stats, it could happen. So an easy example of an ETF or an investment vehicle that could potentially set an investor up for something similar is SCHD, or the Schwab US Dividend Equity ETF. Now, this ETF is up well over 200%, and this is over the last 13 or so years. Not to mention, this ETF pays around a 3.5% trailing 12-month dividend. And on top of that, this ETF has paid more and more in dividends over time, which is exactly where we got that 10% dividend growth rate. Because if you remember in the dividend calculator, we typed in that it was going to pay 10% more or less in dividends per year. So over the last 10 years, SCHD has in fact paid over 10% more every single year on average in dividends, but also has went up in price basically every single year more or less over the long term. But SCHD long term at least has offered substantial dividend growth historically. Now, dividend growth is basically how much in dividends an asset pays relative to the previous year. So just to give a very simple example, in December of 2013, which is more or less 10 years ago, SCHD paid 25 cents per share per quarter, which if we fast forward 10 years later, the same ETF is paying those same investors, if they were still invested of course, 74, let's just call it 75 cents per share per quarter, 10 years later in December. So from December 2013's 25 cent or quarter dividend payouts up until this previous December's almost 75 cent payouts, that is 3 times as much dividend income for every single share of SCHD that you own. So let's say just in theory that investors back then owned 10 shares of SCHD. Let's say they own 20 shares, 100 shares, 1,000 shares. They would not only be getting paid double the amount of dividend income 10 years later, which of course 10 years down the line is not that long if you're looking to be a buy and hold forever investor. But those investors will be getting precisely 3 times as much dividend income for every single share that they own, which just once again proves the point that potentially, at least if you were to invest into SCHD, going off of SCHD's historical numbers, a portfolio could easily compound into a mega portfolio later on, which is $5 invested per day. But there's other super high quality dividend growth style ETFs that also could potentially get you to the same place. Something like DGRO, the iShares Core Dividend Growth ETF, that's up over 130% over the last year, not even including dividends, which are currently paying around 2.3%. But also with DGRO, you can see right here that DGRO is paid more and more in dividends over time, around 9.7% dividend growth rate over the last 5 years. So once again, an investment vehicle that's not only going to pay you a decent dividend off top and help you compound your portfolio, even if you have a tiny amount of cash balance to start off with, but a dividend growth ETF that's going to pay you more and more over time, most likely long into the future, unless something drastically changes. So I more or less wanted to make a simple video showing every single one of you, especially if you are someone building out a dividend growth portfolio, that it doesn't take a massive amount of money, it doesn't take a massive annual contribution, or even a massive starting balance to build a portfolio that starts tiny into a major portfolio long into the future, especially if you're willing to stay the course. Now, not to mention, if you turned this portfolio into a portfolio that instead of contributing $5 per day into just $10 per day, let's say on average, or $3,600 per year or so, this portfolio would have an ending balance now of $1.8 million. So just by contributing a little bit more over the long term, the portfolio is really going to see some benefits. Another thing that we didn't even mention is that over time, this portfolio is going to get to the point that it's going to pay you $40,000, $50,000, $60,000 per year in dividend income, which at that point, this portfolio could be generating enough income to completely retire off of. But my bigger point still remains the same. It doesn't take a massive amount of money to build a massive portfolio later on down the line. It takes an investor that's willing to invest consistently, even if it's just as small as $5, $10 per day on average over the long term into high quality dividend growth style ETFs, something like VU, something like SCHD, something like DGRO, something like SPY, etc., etc. And over time, because the power of compounding, not only is the portfolio going to move up in price significantly, but the portfolio itself is going to sort of gain a life of its own and going to help build the portfolio larger internally. So now that we went through and I showed you guys how just a $15,000 starting portfolio and around $1,800 per year, more or less, which is $5 per day on average, to build a massive portfolio over $1 million after 30 years. Now, lastly, I just have one question for you down below. As of right now, I like to think that all of you guys are also building long-term dividend growth portfolios, and I just want to know what's your number one favorite position across your entire portfolios. Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.